Hey, it's Matt with PriceActionTradingSystem.com, and it is Thursday. It's May 28th. This will be our chart lesson for the day, and this will wrap up our week. It was a fast week because of the Monday holiday. No chart lessons on Fridays unless I just feel like I want to do one. I don't have anything else to do. So it's supposed to rain here all day tomorrow, so who knows? You may get a surprise chart lesson tomorrow, but generally I'm not doing them on Fridays. I'm taking off early on Fridays and just trying to get a little break. But a couple of quick things. I don't want to spend too much time on housekeeping type things, but I think these are a couple of things we need to talk about. Um, Traps. I'm getting a lot of emails on people trying to take traps, and they're sending me emails. Why did this trap fail, or what happened here? In order to trade traps, you need to be a very skilled chart reader. And that's what we're doing here. We're reading this chart. This chart right here in front of you, this chart right here, it speaks a language. It talks to us. Just like if I'm talking to you in English or if you're reading something written in English, this chart tells you something. But it's like, for most of us, it's like reading Russian, or for the few of you that speak Russian, it's probably like reading Chinese, Mandarin, or something like that. Because you don't understand the language, then you can't really do a lot of what we do. So your job, what I'm trying to teach you is how to read this. This chart tells you everything you need to know. It tells you everything. So if you're just taking trades because you see a second entry, or taking a trade because you think you see a trap or something, you're just going to outsmart yourself probably and trap yourself. The whole idea behind traps is they happen at places where they fool a lot of people, even some good traders, into going long where at the wrong spot, or going short at the wrong spot. And so it will be a really nice looking setup to the long side if it traps people to the long side, or to the downside if it traps people to the downside. So most of you are not going to recognize a trap until it actually happens, and then it's too late to enter if it already happens. So I would skip the traps unless you're skilled at this and you've gotten really good at it. Just skip the traps and don't outsmart yourself, because generally what's happening is, I saw some emails today and they asked me, they said, I took this because I thought it was a trap, and they were the ones that got trapped. That's the whole idea behind traps. They fool you. So they're fooling you, and you think you found a trap, and all you did was get yourself trapped. So honestly, I think most of you would be better off to forget about traps. Don't worry about failed second entries. But that leads me to the next point, is I had at least two people contact me yesterday when I was talking about the big downtrend. I think it was in here, and I was talking about failed second entries, and they confused what I was saying with second entries. So let me find one of them and just show it to you. Like, notice you got a new, let me find one right here. You basically got a new swing high right here, double top. So you get a first entry and a second entry. That's a failed second entry long, but that's just a first entry short. Notice off the low here. So several people, I guess the way I said it, I didn't clarify when I said it's a failed second entry, that it was a failure to the upside, not down or whatever. So that's a failed second entry long, and that's why I pointed it out. There was another one somewhere else, somewhere in the same, I think it was right here, got a new high, or maybe it was right here, because you got a new high first entry, and then there's a second entry. So that's another failed second entry. It's just a first entry short though. But there were a couple of them like that where people, maybe it was over here, maybe it was one of these two. Yeah, I think it was this one, because you got a new high, you're working down, you get a first entry, then you get your second leg down. There's a second entry long there. It fails and prices go lower. But no, that's not a second entry short. So just make sure you understand that a lot of times in these trends, I'm talking about failed second entries when I say it's a failure or whatever. So I hope that's helpful to you, because I know if it just been one email, I wouldn't be too worried about it. But when you get a couple of emails asking that same thing, then maybe I was talking too fast and it came across wrong. So I wanted to clarify that. But let's get back to today's chart. I still want to be kind of out on this at this point. Yeah. So let's see. The other thing is I continue to get people that have sent me their chart, and they're just throwing darts at a board trying to find trades. And the problem is you can't read the chart yet. You don't understand this language yet. So you're just looking for second entries and what you think are perceived traps and things. You're just throwing darts at a board, and some of them stick, but most of them miss the target, and that's what's going to continue to happen. So what you want to do today, this is a very hard trading day. If you struggled yesterday, then you got a lot of work to do. But if you struggle on a day like this, it's okay, because the way you have to trade this mostly is a range, and that means you need consistent support and consistent resistance. But look, we turned out at different places just about every time. Then you got a little trend here at the end working up, and it kind of strengthened up into the 2 o'clock hour before it sold off. So this was a hard trading day. Yesterday was a gimme. It was all downhill. All you do was go short, and then it was all uphill. All you do was go long. So those are easy days. These are the ones that are, and honestly, on a good range day where you consistently turn at the same spot down here, or you consistently turn down off the same highs up here, they're easy. I like those kind of days because they're so predictable. You just wait for prices to get there, and then you wait for a signal bar, and you go long off the lows, and you wait for them to come back to the top. You wait for a signal bar, and you go short off the top. It's really that simple. But that didn't happen today. Notice where we turned at all these different locations, and that's what makes it hard. So this is a hard day, a really hard day. So even for somebody skilled, you just have to kind of wait and hone into the smaller patterns is the way you have to trade it. But notice the channel coming down and then the channel coming up. I put this on here. You don't need these because all they're going to do is confuse you. Notice prices are not really working off this line at all. You got two right there, but that's in the middle of the overnight. But once there's nothing really working off that again, it's all working off this line. So just get rid of that. It's not going to help you. Notice coming down, you drew it off the first two, and it turned down one more time here, but look how many times it turned and it didn't even touch it. That tells you something's not right with it. Prices should get back up there every time and test it. And if they're not, then something's not exactly right. So just get rid of that. It's not working. Notice what's happening though. Notice how that EMA is going sideways like a roller coaster, and prices are below it, above it, below it, above it, below it, above it, below it, above it, below it. That's a trading range. On a trend, most of your bars are going to be, if it's an uptrend, they're going to be above the EMA, and if it's a downtrend, they're going to be below the EMA. When prices are back and forth, back and forth, back and forth, that's a range. So there's only one way to trade that, and that's to find the range or trade the very short-term trends within there. And you can see that I got the little, I'm drawing the different support and resistance, and I'm drawing the short-term trends. That's how you trade this. Get rid of that big trend line, and that's what threw off a lot of you, because you're trying to trade this as a trend, and it's not a trend. Most of you would be better served if you would just try to figure out where the key entry points are and just wait till prices come back there. And if you don't know, if you can't find the key entry points and you don't know where they are, and you're taking trades, well, guess what you're doing? You're gambling. Gamblers will not last in this business. They all go broke and they all disappear, because you can't gamble. Gambling does not work as a trader, because there's people that can actually read and understand prices, and they're going to be so much better than you that they're going to outlast you, and they're going to take your money eventually. It's just a matter of time. Even if you're a really good gambler, you might last longer than the average gambler that just throws darts at a board. But you're not going to make it, because the odds are stacked against you too much. So even if the casino games, if you go play, I think it's blackjack, I think that's the best game, maybe you get a 51%, or the house only has a 1% because they're 51%. They have a 51% chance of winning, you have a 49%. And if you play long enough, they still end up with all your money. And it's the same thing here. You don't even have a 49% chance if you can't read this chart. The person reading this chart has probably an 80 or 90% advantage over you, and so you're not going to last. You're going to lose. So if you don't understand what prices are doing, and if you don't see this trend line working up right here, and you know that prices are crawling up that trend line, then you can't take a trade. You're just guessing if you do. So make sure, if you don't understand anything else, that before you ever take a trade, you have to know where the key entry points are. What are the key entry points? They're the support like down here, across here, the resistance like across here, and here's some more support, and the trend lines. These are just angled support and resistance. And if I copy this little trend line right here and move it over, there's the resistance side of it. Look how prices turn back and forth. That's all prices do, is they undulate between support and resistance, and it'll either be sideways like a range, or it'll be up and down like a trend. Look what they're doing right here. They're just undulating until you get a big overshoot here, and then you get the break, a new low, and even at that level you can watch price action work perfectly. So I spent 11 minutes here and hadn't talked about the first trade, but this is all important stuff, so I'm just going to have to do it today. I'm going to try to get through the trades. There's not as many today, but I just think some of you need to step back and think about what you're doing. You're making this way too hard, and you're not grasping the very basics, which is find the key entry points and wait. Your first goal is to find the key entry points, then wait on prices to come to them. Then you have to have a setup. So even if prices come there and you don't get a setup, then you can't take a trade. Even if it looks perfect, if you don't get the right setup, skip it. And that's what many of you are doing. First of all, you're not waiting on prices to get there. And then if you do, then you're forcing your entries because the trade's not good and you're afraid you're going to miss one. Look, if you're trading scared or trading antsy, then you're trading with emotion and you're going to fail. I'm just telling you. You got to be like a robot when you do this. If you're going to be a successful trader, you will trade like a robot. You don't care if you get a trade. I mean, sure, you want to get a trade every 15 or 20 minutes. But if one comes every 1 or 2 hours, you just got to sit there. There's not going to be a trade on every swing. And I get some of you, and you've taken a trade on every swing in every direction. You're just wasting your time. You've got to do this properly. So I'm going to say it one more time. Your first goal is to find the key entry points and then wait on prices to get to them. And then when prices get there, then you look for your setups. And if you don't get a good setup, then you can't take the trade. And your safety stop has to always go above or below the signal bar by 1 tick. If you put it anywhere else, you're going to get stopped out on a good trade. And I get people that ask me this over and over and over. And I say, go read. I'll give them a link and say, go read the little frequently asked questions page where I explain exactly how to handle this. And then they'll send me an email back 30 minutes later saying, but you told me not to take bigger 8-tick stop. Well, I know they didn't go read the frequently asked questions because they wouldn't have asked me again if they had them, because I've already written the answer there. And it's not that I don't want to tell you again. It's just easier for me to send you to the link and let you read it than to me to have to type it out in an email 25 or 30 times a day. So don't think I'm trying to brush you off, or if I send you to a link, it's because I've already explained it and I don't have time to type it out 50 times. So don't be offended by it or anything like that. I'm not trying to brush you off or ignore you or not answer your question. I just don't have time to answer the same question 50 times a day. So if it's a question that I get a lot, I'm going to put it in the frequently asked questions and I'm going to send you there. Just go there and read it. It doesn't take but a few minutes. And you got more time than I got, because I'm having to do this for a couple hundred people versus it's just you for yourself. So don't think I'm trying to be lazy or trying to brush you off or not interested in helping you. That's not the reason I send you there. I send you there because it just is easier for everybody. So hopefully everybody understands that. Let's get to the trades. Okay, I'm going to start with this a little more to the right, just so you can see. I had to back way out to get this big enough to see, so you can't see the big picture. But at this level, I hope everybody can see how flat that EMA is and how it looks like a roller coaster. It's not pointing down with all your prices below it. It's not pointing up with all your prices above it. That's what a trend looks like. There's your EMA. Look how prices are mostly above it and it's pointing up and it's going up. That's an uptrend. That's what an uptrend looks like. Here's a downtrend. Look how most all your prices are below the EMA and the EMA is pointing down. That's a downtrend. But in stark contrast, look at today. Prices are back and forth, above and below consistently. And it's just going sideways like a roller coaster. So that's a range day. So that's so easily recognizable. That's basics. That's price action 101. You got to understand that before you can ever understand anything else we do. So make sure you know those 3 rules about the EMA. That's a 21 bar EMA for the new people that are going to ask me what EMA that is. It's a 21 bar EMA, and this is a 2,000 tick chart. We don't trade time-based charts, so that's why it looks odd and you can't figure it out. It's a 2,000 tick chart. It tells you right up here. You can see the contract and the tick 2,000 tick. So again, let's get to the trades. By the time 7 o'clock comes, right in this down move here, and you're just waiting for something to happen. And you had an uptrend, but notice you got a break and a move to a new high, and you found resistance, and so you're working down. We're probably headed back down to support, but when we bounce here again and get the break, well, we're probably going to try to make a new low here at the very least. But you got to be concerned about that support. We bounced there 1, 2, 3 times. So you may take this short right here. Notice there's a new high, and there's a first entry, and then there's a second entry. I'd really just treat that like a first entry. I wouldn't even really look at that as a second entry because this is a double top. But it's a big bearish bar, and if you've got enough room back down to the low, you may go short there. This is a little bit aggressive, a little bit risky. I've marked it green. It's a really bearish bar, but it's right at the EMA. And of course, if it breaks lower, it's going to be on the other side of the EMA. You just have to have room to get out there, and it's really pushing it. So I marked that one green, and then you can see we're just chopping back and forth. But finally, look how many times you bounced off that level. That's a key entry point. So if you get a setup down here, you want to go long if you got enough room to get out before you get back to the highs. Well, notice what happens here. You got a new high, you're moving down. And you actually broke high, you broke lower here and then came back up. So this is really hard to explain. You don't really have to, it doesn't matter if it's a second entry or not. You're not necessarily looking for them in a range like that anyway. But notice how many times you've tested that support, and you finally tested it. It actually broke lower and turned and went out the other side, all in one bar. So you could go long right there. And that's really like, notice that low, it's a first entry, a second entry. So that's really a failed second entry short with a little double trap right there, because you'd be surprised how many people will go short right there below that bar, not knowing anything about that support or even seeing it. Most traders that don't know what they're doing, they won't even see that support. We know better, but it ticks down there, fails, and instantly turns up. Just go long right there. That's a great entry. And actually, it broke lower again and failed and did the same thing. As long as you got room to get out before that last high, take that trade, because that's just a little higher low. And look how it came back. The EMA is like support and resistance, and notice how it pushed through and it pulled back and tested it. That's what prices do. If they get on the other side of support or resistance, just like here, they push through and they pull back and test it a few times, and it holds, and then they go lower. So prices always come back and test support and resistance when they push through it. And that's all that is a little test, and then we go straight up. There's a failed second entry short there, but you don't want to go long right into all that resistance, just like you didn't want to go short here. This time it works, but it doesn't go very far. Notice it fails. And it could go 1 or 2 ticks and fail and stop you out. So that's just not a good entry. Even though it works, it's not a good entry. Don't take it. But notice what happens here. Just like you would expect, it breaks out, but it instantly fails. It goes a couple of bars up and runs into a little resistance, comes back down. It looks like it's going to test it and go forward, and then it fails, and it gets back inside. And look, it actually comes back. I don't have it drawn across there. But once it gets back in it, it comes back and tests it several different times before it goes lower. Now, I like this lower high. This is actually a lower high here because it makes a double top, But you got a bar with no body, basically a tick, and you got 3 bars stacked up. The reason is probably because we're not going higher. There's resistance there, and you're way away from the EMA, so there's a good chance we're coming back. So you might, if that was a little better signal bar, I'd probably say take that trade. You might still take it aggressive, but when you start trying to pick tops, you're going to have some losers. So just see if you get a lower high, which you do here, and you still got room to get out before that EMA. But really, the key here is you got a failed break out of this range, and we're probably going to come right back into it. And that's exactly what happens. It's too bad you don't get a good setup here, but it's just too congestive and not a very good signal bar. And look at it, it runs straight down, and look, and it finds a little support there, but we end up going to the original support resistance down here. You get an overshoot of this channel, then you get a break. You actually already had a little close outside up here. Runs down, and this is really, it's too bad you didn't get a good signal bar here, because this is a really great place to look for another setup, but it just doesn't materialize. It drops on down. That's what I'm saying. And just because you were expecting a possible chance to go short here, you don't get a setup. You just have to skip it. Sure, and it works, and you'll go, oh, I knew I should have taken that trade. But you did. If you didn't have a setup, you did the right thing, because the worst thing you can do as a trader is reinforce bad habits, because most of the time they will burn you. The few times you see them go on will keep you trying to perfect it, but all you'll be doing is trying to perfect a losing setup, and so don't worry about it. But you run down here, you find your support down here. It pushes a little lower than it had been, but notice how many times it bounces there. If you'd had a good bar down here that you could get in before you get back to the EMA, this would have been a good place to enter, but I don't have one there, so I just have to watch it go. But anyway, notice you make that failure, you come back, and you made that low, and you test it once, you test it twice, and you got a fairly good bar there. That's a good place to go long right there. And there's actually a second entry long right here. Notice that new high, first entry, second entry, but no setup. But it comes back and gives you a, and look how it takes off now. That's because the smart traders know, they know not to enter right here. So it doesn't go anywhere because there's no momentum behind it. And then suddenly you get a double test of that area right there, and you get a decent bar, and look at it go. Now people are smart traders say, okay, we got some momentum now, and we've tested this a couple times and proven it. It runs up here to the high, and we're just turning down at the highs again now. We just went into a tighter range. You run back up here to the highs, and you get a setup right here. Nice bearish bar, plenty of room back to the EMA, definitely plenty of room to here. Quick, easy trade. There's a lower high right here, but it's right in the middle, and you don't have much room. And notice what would have happened to you without enough room. Then it bounces, and you would have got stopped out. I mean, that looks like a great trade to the downside. That's what a trap will look like, because that just draws people in like flies. It's like flies to honey. They see that big bar, and they think, I'm going short right here, and it goes a tick or two and reverses on them. Now, that actually might be a good place for a trap. That might be a good place to go long, because notice the new high, and it's a first entry, and then it's a second entry, and there's a short trap right there. I marked this one green because of that trap, but notice how we've got these bars stacking. You got 1, 2, 3 by the time this closes. This one has no body. That's congestion. And notice what happens. It breaks up and fails, but it doesn't stop you out, and it still goes forward. But that's why you got to be careful, because sometimes it breaks up and fails and comes back down and stops you out. So I marked that one green only because of the trap. And then we're just running higher. There's no setup. You can't go long into that. And then there's actually, notice the low here. First entry, second entry, and that fails, and it turns and goes up. But it's too far away from the EMA. You do have this trend line working up. I mean, it's another one that you could possibly mark green, but look how the bars are stacked up again. A couple of them don't have any bodies, and notice it doesn't go very far. It goes far enough that you probably would have scapped out, or you know probably to it you would have, but you're just reinforcing not so good trade, so I didn't mark it. You don't get anything back to the downside till you get a lower high here, but that bar is not perfect. It's right into the EMA. Just better to skip it again. And then we bounce down here on a second. Notice that 2 legs down, that nice bullish bar way away from the EMA, right here where you've been getting support. That's what you want. And it takes off. And then we just get stuck in this. There's a possibility of a long here. I didn't mark it, but if you've got enough room to get out there, you might go long. And you see here, I think you could have got out of that one. Let's just see. I'm really curious. Your entry would have been 40, 50, 30, 40, 50. So yeah, you'd had enough room there. You might take that one. Just glancing at it when it doesn't look like there's enough room, but there is. But you get a great entry right there. You know you got enough room on that one. And that one, and this is a good example of why we go for 4 ticks. Because if you tried to get any more on this one, you'd have had a loser. You got exactly, there was actually exactly a 6 ticks move from the bottom here to the bottom here, which is what you need. You need 1 tick for your order, and you need to move 5 ticks to really make sure you get filled on a limit order. So you need 6 ticks for every trade, the way we enter and exit. And that's exactly what you got there, and then it reverses. So there's a reason we go for 2 ticks. So again, we got another trap right here. Notice first entry, second entry, but you got another nice signal bar here. When this didn't go down and bounced off that EMA, don't enter again. Even though you got a nice bar here, because it still made a higher high there, and it fails 1 tick and turns up. That's a short trap. That's another. Look how pretty that looks, and you're looking for shorts maybe off the highs. So you're going to trap some people right there, and that's a good place to go long on that trap. And that's a great. It breaks lower and turns and goes out the other side. If you put your sell stop there and it goes 1 or 2 ticks like that and turns and starts going the other way, and if it goes out the other side, you can just about bet you're trapped. And we're at 27 minutes, so I'm going to move on. And we just move up here and go back in another sideways, so we're playing the range rules again. There's your nice bullish bar at proven support with enough room to scalp out. Take it. And you don't get anything else there. You fell out the top, you don't get a setup. You fell out the bottom, you don't really get a setup. And now you're finding support over here. And you're just kind of moving back and forth. Here's one. This was a good trade right here. This is actually a second entry long and a double test with a nice signal bar. I think the reason I didn't mark this one was because it was right at the EMA. But when you're that flat and going back and forth, you're going to have to push through it sometimes. So I'll be honest, I'm going to at least mark that green. I'd take that trade right there if I'm trading at that point in time. And then there's that trap, just like we saw. It's a repeat pattern, just like the one right here where it broke lower. We see it all over again. And hopefully if you didn't see it, if you saw it the first time, you're smart enough not to go short there. And when it broke and failed and turned up, just go long right there. You do have to be concerned here about the resistance, and that's why I didn't mark it. But you may still take that trade on a trap, because that's what it takes to push through up there, is a trap or something. But I'd like to see the trap a little closer. But that is a repeat pattern. And then, of course, you got this little channel working up. You get your break, a couple of legs, and then you're coming back again. I drew this late afternoon brown channel. Let me back out a little so you can see it. It turns out to be a really strong. Now that, notice how the EMA is pointing up now, and most of your prices are above it. We've gone into a trend now. So now you're looking at these key entry points on the trend line. And notice you work back over here. Notice you got a double top here in the first entry and then the second entry. And then it makes that little breakdown right there and fails and turns up. There, it's trapped somebody. And that confirms your trend line. You drew it off the first two, and that confirmed it. and look at it go. The smart traders all know that, and look at it go. And this is a spike in channel. We spike up and go into this channel. This is really a strong trend. When you start to see these little bars and very shallow corrections, that's a strong move there, but you just don't really get a good entry. I don't see anything I really like going up through there. And of course you come back to the main trend line and notice you're coming back, you get a first entry and prices turn back down and they actually make a little double bottom there and then turn back up. So that's really like a second entry all in one bar there. It's not a clear second entry, and so I don't want to confuse anybody and say, well, I don't see a second entry. Well, you're not going to see one there, but it's still, notice you're working out, it corrects and turns down. It breaks higher and turns down, and then on this next bar it breaks higher again. So it's like a second entry all in two bars there. So it's not ideal, it's not what we really look for, but it's still a second entry. So hopefully that makes sense. If it doesn't, I don't know, just forget it, because it's really more advanced and probably hard for some of you to grasp if you're just trying to learn second entries. And then somebody went short right here. Somebody sent me their chart. There's no reason to be looking for a short here. If anything, you might have gone long right there. I didn't like it because I don't like that signal bar. It's mostly bullish, but you're right into the EMA, and you had this spike in channel, and you didn't get back to the upper side. You're losing momentum, so you're probably going to at least get a measured leg like this right here. And look what that means. It means you're going to come back down here somewhere. And so going long right there is a little risky. But you definitely don't want to be going short here because you got an uptrend, and this is going to be the first break of that channel. And so notice that eye, first entry, and then you get a second leg down, you get a nice bullish bar a little ways from the EMA, plus you broke below that support. That's where you want to go long. And you actually get a turn down here. If you drew this off here and pulled it up, that's just not enough evidence to me yet. That's a big bearish bar, but it's right back into that support. So just wait. And you do get a second entry short right here, but not a good signal bar, so you can't take that. And that took us into the 2 o'clock hour. So I'm on 33 minutes. I didn't even want this thing to be that long, but it was just a lot of stuff we had to talk about today. So, but I'm not going to beat around the bush anymore. I'm going to wrap this one up. It's already too long. I'll be back here Monday for sure. Tuesday is my surgery for my eye surgery, so I'll remind everybody on Monday about that. So everything will be status quo on Monday, but Tuesday my surgery is that morning, so I won't be trading. There won't be any mid-morning chart Tuesday. There won't be any chart lesson Tuesday. I'm assuming that Wednesday I'll be able to come in. Even if I'm not feeling good enough to trade, I'll probably still be able to come in, and I'm assuming I can still do. So I'm assuming we'll have a relatively normal day. Even if I don't trade, I'll still put up the midday chart, and I'll still try to do a chart lesson. We'll just have to play Wednesday by ear, but I definitely won't be in here Tuesday. So, but I'm going to wrap this up. It's getting too long. We'll be back again Monday for sure. Maybe you'll see something tomorrow, since I know there's not going to be a Tuesday next week either, but we'll see. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.